My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain you, but to educate and teach. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Tough day for the averages. Dow sinking 166 points. S&P losing 0.29%, while the Nasdaq eked out a 2 basis point gain. But I'd argue it could have been much, much worse. And honestly, it probably should have been worse and was at one point in the day very ugly. But the Nasdaq rallied into the close, taking the rest of the market with it. I kept wondering from the very beginning, from the opening bell, where are the sellers? Sell. Where are they? Why aren't they reacting to that ugly warning that we got Monday from Apple? Why is everything now, no matter how negative, automatically treated as a buying opportunity? Buy. It's like there's always something to be said for buy. Instead of sell. And I think I know the answer. There is an answer. I think it's the index funds. 60% of the money coming in over the transom these days is coming in via index funds. And they buy everything, including the stocks that should be getting hammered by bad news. They buy in unseeable waves, and they are in control of this stock market. Not mutual fund managers, not hedge fund managers either. Yes, index fund buyers. I know lots of people call this market a bubble. And of course, they then blame an easy Fed. But maybe, just maybe, listen to me. There's no one to blame. You simply have many companies doing well, companies that have nothing to do with the coronavirus, which is what hurt Apple. The stocks of these companies attract buyers, and the buyers use any kind of weakness to back up the truck. They don't even wait to see if the stocks they want are down. They're too eager to pull the trigger. It's like they worry that if they don't use the dip to buy, they'll miss out on a rare and short-lived moment of weakness between waves, cascading waves of index fund buying. Buy. Consider the case of Apple. Yesterday, my wife and I used the day off to walk around downtown Manhattan. It was a day where I agreed not to use the PC, not to look at it, not to examine the latest coronavirus news, not to tweet. Something that, let me just say, a combination of tweeting and coronavirus, I'm unhealthily obsessed with. Despite my best efforts, though, nothing stops the news. And I got an alert on my Apple Watch and my Apple phone about the Apple warning. The largest company in the world says it will probably miss its sales forecast this quarter and perhaps longer, depending on the course of the virus, which no one knows, of course, because the epidemic has so thoroughly messed up China. My first thought, I said to my wife, Lisa, I said, you know what, Lisa? We can crash if we get more announcements like this. Apple's the most important company on earth. If it can't make the numbers, that means many others won't be able to either. You have to presume this is just the beginning. Her reaction. Apple's having a tough go in China? Did you or anyone else expect otherwise? I mean, nobody's going out. Nobody's shopping. Nobody's working. So what did you think would happen? Well, I explained to her the domino effect that Apple could have, and she asked me if they were at their highs. I said no. She said, then why sell? Stocks always come back. That's what they do. They come back. Well, it wasn't a rebuke so much as an honest view of how people feel about the stock market these days. Hence those index fund waves. I couldn't let it go, though. Apple could be the financial ground zero for this epidemic. They have retail stores and demand for their product is slowing, and they make product in China. Her reaction. Then let's go to the Apple store and get all the iPhones we need before they run out. I asked, why do we need more iPhones? And she said, you never know. And she immediately asked the guard for the nearest Apple store. I did not protest. I simply said, maybe it's time to go home. Maybe I do some work. When I explored the Apple issue when I got home, this is what I came up with. Apple has 6 or 7 supplier plants in the affected area around Wuhan, but they're simply parts companies, sub-manufacturers that can be replaced somewhere else in China. That could relieve any storage, it could relieve any shortages, even the ones caused by my wife. However, the more important question may be, how many people can the Chinese government get to go back to work throughout the country? It's a tough situation. The Communist Party doesn't want to be a commerce bottleneck, but they also don't want to kill their own people. I think it's more of a push that they can do it, although we don't know yet. Even if the Chinese can get manufacturing going again to supply the rest of the world, the demand from within China is very low. That's not great. You'd think this news would be devastating. And there was certainly, we saw, particularly at the opening, some real negative pin action. The stocks that are directly dependent on Apple, like Skyworks, Broadcom, Cirrus Logic, Qorvo. But incredibly, the other semis didn't feel the impact at all. NVIDIA got some positive pushes from analysts, some of whom missed last week's unbelievable move. Micron was down almost $2 pre-market trading, then it quickly made up most of those losses. Supply so tight, demand strong, which is all that matters to the commodity chip maker. AMD? Jeez. The hottest of the hot has simply soared since his last quarter. Remember the one that was supposed to be really bad, and I told you it wasn't? Today, the company put out a release about how Google compute engines using their processors. Crazy thing. I figured AMD would get that business anyway. It seemed like a non-story to me, but people were genuinely wowed. Stock surged nearly 3%. If you were worried about Apple and what it could do to the rest of tech, you ended up fighting both Amazon and Facebook, the NASDAQ kings, with the latter benefiting from CEO Mark Zuckerberg's soothing words in Europe that included a request for the kind of censorship that he'd previously been a lot less receptive to. Oh, by the way, Microsoft didn't get bogged down either. It rallied $1.88 or 1%. Tesla, up $58. But, I mean, honestly, is that even a news story anymore? Why wasn't all of tech brought low by Apple? Isn't that really the question? I think these buyers were simply waiting for dips. So when we got them at the opening, they bought stocks hand over fist to get ahead of the index fund wave. I also figured the industrials had to take a hit. What I discovered is that only stocks that are directly called out by Wall Street research get hit, like Emerson, which was downgraded. Maybe other industrials will get downgraded tomorrow, but Emerson has more China exposure than most, and that's the one they picked on. Now, when I heard that Apple's having problems sourcing after my tech check down, I thought that the sellers might be saying, wait a second. If Apple can't get parts, what about retailers who source heavily from China? Aren't they at risk? Isn't that something I should worry about? Well, I didn't have long to wait. Walmart reported missed numbers with a slow Christmas. But management issued an earnings forecast of more than $5 a share for the year. So investors felt comfortable buying the stock, even after that not-so-hot quarter. By the way, not-so-hot quarter that was admitted by Doug McMillon, the CEO. He told us. I know many purists were furious that the stock didn't crater on that blow-up, although I think the company outlined a terrific e-commerce strategy that can eventually allow them to rival Amazon. Next thing you know, Walmart goes from being down in the pre-market to being flat and ultimately up, as it told a real good story at its New York City analyst meeting. The 30% growth rate of Walmart's digital business controlled the narrative, helping the stock close up 1.5% by the end of the day. And why not? Compared to other retailers, Walmart looks pretty darn cheap on that $5 number, and it had a floor underneath. No wonder it closed up nicely. You know the irony of ironies about this market? The worst performers, ones that there was no news whatsoever, the banks. Why? Because of a sudden drop in interest rates caused by a worldwide slowdown that could get into a full-blown recession. The banks do better in a rising interest rate environment, not a lower one, so the stock of JP Morgan and Citi, who I like, got crushed. They could not bend the simple linkage. They are still below. They're just doing awfully since they reported, even though they reported great numbers. Ironic, bottom line. An Apple pre-announcement drives interest rates down, which hurts the banks, but not most of the semiconductor stocks or most of his colleagues in tech of all places. Sometimes truth is stranger than fiction. Terry in Michigan. Terry.
Hey, Jim. Thanks for taking my call. My name's Terry Burkhardt. I'm a longtime listener, first-time caller, and I think the first caller that ever self-identified is coming from the Upper Peninsula. I took a speculative position in Agnico Eagle Mines, hoping to get some gold exposure. I still like the story, but after the recent earnings report, it is significantly down. I'm wondering whether you think I should double down or cut my loss.
I went immediately to Heather and Kate. That's right. I went to the two producers who are the people who want to get people on. When I say get people on, or their own people on. And I said, I want Mr. Boyd on. And I do want you, sir, because I did not understand what happened with that quarter. And I need explanations. I'm looking right now at Katie Spencer, who was a person who was integral in my anger of trying to find out what went on. Heather Gaines being the other person. And I'm not going to tolerate that. Okay? Let's go to Kailash in Illinois.
Hey,
Kailash, what's up, man?
Hey, booyah, Jim Cramer.
Booyah.
Love your show. How are you?
I am good. How about you?
Great, doing great. Hey, need your thoughts on BYND, Beyond Meat. Been holding it for 3 months now, but really nervous about
Look, just hold on to it.
earnings.
It's an ecosystem. I know a lot of people feel it's incredibly overvalued. I'm a big believer in Ethan Brown. I am absolutely not going to distance myself from a stock that I think has a lot of upside over a 5 to 10 year period. And that's how you have to think about it when you're dealing with Beyond Meat. Like, the market's ironic, don't you think? Most of the semiconductor stocks were unfazed by Apple's seemingly devastating revenue warning. Most of tech did well, but the banks got crushed because of a sudden drop in interest rates. People worried about a recession because of Apple. Mad Money tonight. LivePerson helps over 18,000 brands communicate with the customers. But does the company need help communicating its story? I've got the CEO after a severe post-earnings decline. And companies like Apple and Walmart are feeling the pinch from the coronavirus. But which stocks are taking the other side of the trade? I'll reveal. And Cloudflare is one of the hottest IPOs when it hit the tape last year, but it's stalled lately. What are the earnings signaling? I've got an exclusive. Stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.